Aniket Ullal, Head of ETF Research and Analytics at CFRA. How have ETF flows been so far in 2025, and what is your view for ETF flows through 2026?
Hi, Chris. Thanks for having me on. 2025 has been a very good year for ETFs, actually a record year. We're only in mid-November and we're already past the annual flows record. The record actually was from last year. Every year the last couple of years, we've seen very strong years of inflows. Last year, the record was 1.12 trillion with a T, so that's a lot. And we're already at 1.14 this year. So overall, it's been good. I think what's been interesting is we've seen flows across asset classes and across strategies. We've seen ETF flows go into fixed income, equity ETFs, international ETFs as well, though not as much as we would have expected. So overall, a very strong year for ETF flows, and I would say we're kind of seeing the ETF industry evolve now, where we're seeing the industry evolve into different price segments. We've got the lower price segment, which is more focused on low cost beta, the mid-price segment, which is more focused on active, and then the higher fee segment, more focused on derivative-based ETFs. So it's been a good year, a lot of new products and a lot of inflows.
Excellent. And now what about 2026?
Well, Chris, if you'd asked me at the beginning of 2025, would we have 1.14 trillion in 2025? I wouldn't have predicted that. So we have to be cautious with our predictions. But I think overall, I think it is going to be a good year for a couple of reasons. One is it's clear that the ETF has become an investment vehicle of choice. Investors like it both on the institutional side and retail side. There's also other tailwinds, I think, for the industry. One is that it's become much easier to launch crypto ETFs. The SEC changed certain rules in terms of generated listing standards for crypto ETFs that will, I think, increase the number of ETFs. Importantly, the SEC also looks likely to approve ETFs as a share class of mutual funds. In other words, you've got all of these big mutual fund managers who now looking to launch ETFs as a share class of their existing funds, which means they don't have to launch greenfield funds. That should really accelerate ETF assets as well. So overall, I think it should be another very good year for flows next year.
Now let's turn to market performance. How have ETFs performed so far in 2025?
Well, as you know, ETFs, kind of encompass a whole range of strategies. So it depends on the specific strategy. If we look at the big headline indices, of course, ETFs linked to the S&P 500 or the QQQ, the Nasdaq 100. It's been a good year. I mean, the ETFs linked to broad, large cap US equities have been up about 16, 17% this year. We've seen really strong performance in certain sectors. I'd say outside the US. Particularly, China has been up about 35%. Korea is up 80%. So we've seen very strong performance outside the US, even though we talk a lot about the Mag 7 in the US. It's also been a good year for Europe and Asia. So I would say performance-wise, overall a good year. This continues the good run we had from last year. And going forward, we need to see if that can be sustained. But 2025 has been a good year, both in terms of flows and performance.
Of course, predictions are hard. Looking into 2026, how do you think ETF market performance might be?
I think there's a few things we need to keep an eye on. One, of course, is what happens with the labor market. I think we've seen mixed signals here, where we've seen some softness in the labor market with some, layoffs and so on recently. So I think that's something to keep an eye on. Overall, we expect our forecast right now is for single-digit returns in US equities. So we do expect it to be another good year. And generally, what our analysis at CFRA has shown, led by our chief investment strategist, is that when you have a good year, you want to let your winners ride. In other words, the sectors that are done well in that year generally tend to perform well in the next year. So, we'd expect technology, communication services, and so on to be fairly strong sectors. There are some wildcards. Next year is a year for a midterm election. We generally tend to see more volatility in years where we have midterm elections. So those are things to keep an eye on. But overall, we're still optimistic for next year.
And finally, what are the major macro and industry level trends and developments to watch out for regarding ETFs?
I think an interesting thing to keep an eye on is what happens with the retirement accounts. I've been in this industry for quite a long time, and every year we talk about can ETFs break into the retirement industry, specifically 401k plans and so on. And that's been a hurdle for various reasons. One is the fact that the tax benefits of ETFs don't really carry over into retirement accounts. There are administrative issues like record keeping because ETFs trade intraday. But I'm now seeing big asset managers, credible asset managers like State Street and so on, really trying to make a push into getting ETFs into retirement accounts. So I'd say if there's one thing to track, I would really track that. And the second thing is just looking at new launches. Like I said, we've seen an easing of standards in terms of the kinds of products that can be brought to market. So I think it's going to be interesting to see what new kinds of strategies are launched next year.
Aniket, excellent insights. I learned a lot. I think a lot of people will. Thank you for your time.
Thank you, Chris.